Good evening, everyone. How's everybody doing today? My name is Lawrence Laddie, also known as Mr. International, host of Financial Independence Through Small Multifamily Investing. Tonight we have a special guest, Sonya Rocvil, a fellow New Yorker, straight out of Brooklyn. So without further ado, our guest tonight, Sonya Rocvil, is a asset manager and acquisitions manager also for her company, Bedrock Real Estate Investors. She's going to talk tonight about managing the asset, right? Managing asset. You got to manage the asset right. If you don't manage the asset, it's going to go down the drain very fast, right? You're going to be losing money, right? And so she's also going to talk about her journey in real estate, also a little bit how she began. And she's also a mother of two, right? She's she's graduated from Baruch College also. And she's also an adjunct instructor at NYU. But her passion, if you get to talk to her passion, is real estate, right? So Sonya, I want to say thank you for coming. Sonya, thank you for coming. Appreciate you taking time with your family. The floor is yours.
Lawrence, thank you so much for having me here today, and it was great hearing everybody's introductions. Thank you all for tuning in. So I'm going to share my screen. I had a little bit of technical challenges earlier today, so bear with me if I have to kind of flip my screen around. So hold on here. All right. Does everybody just see one slide?
No, you see two slides again.
Oh, you do? Okay. Okay. So now you just see one slide?
Right.
Okay. Fantastic. All right, everyone. So thank you again for having me here today. I am going to be talking about asset management for multifamily. So we talk a lot about acquiring properties and purchasing properties, but you know, what happens afterwards? And that's what we're going to talk about today. So let me just introduce myself. As Lawrence already said, my name is Sonya Rocvil. I'm the principal and founder of Bedrock Real Estate Investors, and I syndicate and operate multifamily buildings. So I did not come from a real estate background. I actually started out in accounting undergrad at Rutgers, and I started my career as a financial statement auditor for what's now a Big Four accounting firm. But I was always fascinated with real estate, and I knew early in my career that I didn't want to be a partner at the accounting firm. So after getting my CPA license, I left the firm and I began working at a financial services company at a Fortune 500, and I spent the majority of my career there. And then I went to Baruch College for my MBA part-time. And in 2013, everything changed for me because my entire group and I were laid off. And what happened was that really just gave me an opportunity to take a step back and think about what I really wanted to do. And I got a lot of support from my husband and my parents, and I decided to really pursue real estate. Prior to leaving my company, I've been thinking a lot about real estate, reading a lot of books. I started joining my local RIA, and then I was trying to figure out how I could fit real estate into my life. And when I no longer had a role at my company anymore, it gave me that opportunity to really just dive right in. And so that's what I did. I joined multifamily groups, and I realized that the skills that I had learned along the way of accounting and investment optimization and project management, they were all things that really helped me in evaluating deals and then learning also how to run them. So As I was, one of the things that I did also was I joined an investor group. And part of that, a mentor group, it helped me understand and learn more about multifamily. And what I did was I learned about a lot of deals that people were working on, and I invested passively first as an LP in other people's deals for two reasons, really, so that I could learn more about how deals, how people ran their deals. I could learn more about different markets. I'm in New York, but I knew that I wasn't going to be buying multifamily, larger multifamily deals in New York. So I've been focused on the Southeast and in the Midwest. And so what this allowed me to do was learn about different markets, and then also have on my resume that I was an LP, and at least I had some knowledge of multifamily. And that really helped my conversations with brokers as I was looking at my own deals, and I would end up syndicating deals. And it also helped with my investors because they saw that I had investments on my balance sheet, or investments that I was working on, so they could see that I was actually also doing deals too. So it helped to put all of these under my belt. So when I started my company in 2013, my business model was really to acquire competitively priced property and manage the expenses and revenues and provide quality homes for residents and cash flow for investors. So like I mentioned, I syndicate deals, and it means that we find properties where we think there's a value add opportunity, like a number of you have mentioned, as part of your strategy. And then we build up on that strategy and execute for that property. So beginning in 2014, I went on to acquire my first deal. I work with other syndicators and operators like myself, and we bring our mutual friends and families together, our respective friends and family together to purchase our properties. So as a deal syndicator and operator, I've acquired through joint ventures with 5 properties totaling 422 units and over $20 million in asset value. And all of these on this page have been in Georgia. 3 of them in Atlanta, 1 of them was in Augusta. Of the first property that we acquired, we sold it within about 2 years. Similar with the second property that we acquired in 2016. We held it about for the same amount of time, and really exceeded our investors' expectations on those deals. And then we also did very well on our last 2 deals that were in Atlanta and Augusta, that we acquired in 2018 and 2019 respectively. We sold them both just last year. And having various strategies for these different properties, it has been a great experience with them. And so all of our Georgia portfolio is sold at this time. And more recently, I acquired with another operator a 48 unit in Birmingham, Alabama. And I think my on-the-ground partner was on probably a few weeks or a few months ago talking about his journey as well. So that's been the 5 properties that we've had. So let's transition to our topic. And today, as I mentioned, I'm going to talk about asset management. And but as we do that, I wanted to just give an overview of framing of the multifamily process. And this is just something I had put together when I thought about the stages of multifamily. So as an operator, the cycle of the acquisition process can be described in many ways. So the way I'm looking at it, I see it as, these 4 stages: the hunt, the capture, the hold, and the release. And this is not a process of just extracting value, but it's really identifying and acquiring properties where you can add value. And the hunt, or the acquisition, is the process of finding a market and a submarket that meets your criteria. The capture, you're doing your due diligence work now that you've found the property and you want to validate your assumptions. The hold is the longest stage in this 4-step process, because that's when you're working to get the property to perform the way you had projected it would. And that's the phase that we're going to be talking about today, and when I'm talking about asset management. And it's the longest process. It's the part that's talked about probably the least, and probably the most challenging part, because that's, again, when you're trying to get you're executing on your strategy. And finally, the release is the point where you're either exiting the property or refinancing the property, and you're moving on to another stage with your property. So one of the first things that I always get when people know that I live in New York, but I invest outside of New York and in the Southeast, they always want to know, how do you manage it? Or do you do property management work? What's happening to your properties on the ground if you're out here in Brooklyn? So I also want to just make a distinction between property management and asset management. So our team, what we do is we typically hire third-party property management companies that are present in the market where we are. There needs to be that local presence on the ground, just think, of course, in case there's an emergency. But then the role of the asset manager is to really work in partnership with the property manager to set the strategy for the property, and also to make sure that strategy is being executed. So especially if you're managing a property out of state, you really need to have a strong property management partner. So, when I think about asset management, that's determining how are you going to, once you acquire this asset, what is the plan? What is the goal for this property? You're partnering with your property management, and then as you're holding the deal, you're evaluating, is the strategy executing in the way that you want? Sometimes you have to make a change, and sometimes there have to be adjustments. And so that's the role of the asset manager. You are working closely with the property management, but it's not necessarily the day-to-day management of the property, which is what the property manager does. They're executing on your strategy that you've provided. They're on the ground presence, and they manage the residents, and of course, all of the repairs and maintenance of the properties as well. So just to kind of drill in again on this point, the reason the property manager is so important on your team is we work very closely with our property managers to validate and understand, make sure that we're all on the same page about the property that we're investing in. There have been times when I made some assumptions about a property that we thought we were going to acquire. And I made what I thought were pretty conservative assumptions about how long it was going to take to get that property online, because it was primarily, there was a lot of down units. This was actually, though, in COVID, and our property manager had advised that, listen, with what's happening right now, the lead times to get properties online has been elongated substantially. And so what that meant was I had to really modify my assumptions, and having that ear to the ground, because he knew what was happening with other properties in the portfolio and what was happening with the contractors overall, he was able to give me that insight. So that's why it's really important to find the property manager that you can lockstep with, and they can help to validate your assumptions. Also reviewing my pro forma before I make an offer, on making sure that we understand and we're on the same page about rent growth and assumptions, what we think we can get for a property. Touring the property sometimes for due diligence, if you have a really good relationship with the broker, sometimes what they'll let you do is, you can ask your property manager to tour the property for you, and that would be sufficient to put in an offer. And then, of course, if you get an offer accepted, you have to, as the owner, you have to get there right away. But to have that initial view of the property, it's very helpful to have a property manager help to do that. They also help in the due diligence process, and also reviewing your CapEx budget when you're doing your renovations. So these are all the things that are important. And the reason I'm spending some time on this is because this is also going to feed into the asset management piece as well. So we're also going to spend a little time just talking about underwriting, because this again is feeding into how you're ultimately going to end up asset managing your property. So, underwriting is really the beginning. It really sets the stage for your asset management. What you're doing is you're putting in your assumptions for your revenue growth, the income that you're expecting to receive from fees, and collections, what's happening in the market. So that's why it really takes that additional knowledge of what's happening on the ground in the market to make sure these are all reflected. Then for your expenses, you're looking at your taxes and insurance, making sure that you have very good quotes on your insurance and that you're reflecting your new purchase price and your taxes. You're understanding what's commonly paid for utilities. You have a good sense of the age of your property, the level of repairs that are needed, and then the expected, when you factor in turnover, how much you're expecting to pay in turnover for your property. It's critical that, sometimes I see in underwriting, people are looking at like 1950s properties and thinking that repairs and maintenance is going to be, $350. It's not going to happen. You really have to know, based on the age of your property, based on some of the things that are related to that, you have to know and make sure you factor that into your expenses. And then other expense items, other reserves, your CapEx and operating reserves. So understanding all of these items really helps to set the stage for what you're then going to have to measure in your asset management. So through your asset manager as an operator and an asset manager, you're working again alongside with your property manager. One of the best things that I found is to have weekly meetings with the property manager to make sure you're looking at some of your metrics on a weekly basis. When we first started out, we had a monthly meeting with our property manager, and fortunately it still worked out for our property, but that was not really a best practice because you're not finding out till a month afterwards that how your property performed. And if you need to make changes or adjustments, you really need to be on the mark with that, so what's happening. And then so you're looking at how your property is performing versus the plan. But the other question that you always have to ask is why? Why did that change happen on the property? So sometimes when we're looking at a variance to the plan, or we're looking at how do we perform versus plan, we may be doing better or worse. I always want to understand why that's happening, because it will inform you if you can expect that to happen again, or if that was an anomaly and we shouldn't expect it, and that is something that we should know, whether it's good or whether it's a positive increase in revenue, or if it's an expense in either case. So let's take a look at this slide again, and now this is going to be from the asset management perspective, and here I want to focus on some of the metrics that we look at on weekly. So this is the physical occupancy percentage. That's how many people are in the property. The economic occupancy is once you factor in the number of people that are in the property, how many people are paying, how much are you actually receiving in rent. That's your economic occupancy percentage. Then looking at your other income and fees, and you'll also need to focus on your collections and AR. So you're also looking at your P&L line items, and so the P&L, your financial statements, you're reviewing that versus your budget. This is something that we're really looking at on a monthly basis, because sometimes it's challenging to look at expenses weekly, but our managers do tell us if there are unusual expenses or something large that came up. during the past week that we should be aware of, so we can expect that in our numbers when we get the final report. Also, another thing that we keep track of is turn costs. That's how much is it costing us to make a unit ready to get it to rent. And so this particular item is not necessarily, well, you can look at it both ways. One of these could be for your regular repairs and maintenance, just for a regular turn, once you've stabilized your property. And then if you have a specific CapEx budget to do larger renovations, you still want to understand what that cost is as well. And even though that would be on the CapEx side, you want to understand what that turn cost is too, and how does that compare to budget, and how does that number factor in as you're looking at doing additional turns. Are you going over the amount that you projected, or are you staying within what you thought it would? Then on the expenses, also the vendor aging. So this is also just about cash flow management. Sometimes I've seen managers report the revenue expenses, but then some of the bills still need to be paid. So we have to take a look at that, because we want to make sure that our vendors are paying on time and that we have enough cash flow to cover any of our vendors. The other items that we're also looking at constantly is move-in and move-outs. So you really want to know how many people are coming into your property versus how many people are moving out, and you'll see why that made a big difference for us in one of the slides coming up later on. But then knowing who's moving out helps you line up new potential residents coming into the property. So it's really good to have like a forecast of people who are going to be moving out of the property, so you know which apartments are coming up for rent, and you can prepare to get those apartments rent ready. So when the resident moves out, you can work on it and get it turned as soon as possible. Traffic and lease up, just this is just good information to know. How are people finding out about your property? Is it through Google? Is it Facebook? Are they just driving up to the property and then just renting? Is it how are the traffic that's coming in, how is that converting into actual lease ups? So that's really good information to have on hand, especially if you're doing a large turns and you have a lot of vacant apartments. One of the other items that we review, and this one is on a monthly basis with our property managers, is the bank reconciliations. This is something that you want to have. It's usually part of your reporting package, just to make sure that all of the income expenses have been appropriately accounted for. You can see any reconciling items. This is something I like to take a look at. It just helps to tie up all of the income and all of the cash flow that has transpired throughout the month. And finally, a rent analysis. This is something that is about every month or every other month that we get from our property managers. It's just understanding what's happening in the local market, making sure that you're still within the line of what rents are going for in your area, or you have an understanding of what's happening in terms of vacancies. That's also important because you know that if the surrounding areas are all full, you maybe have some room for your rent to potentially do a little bit more increases, because there's not a lot of openings in the surrounding area. And then also just for the amenities that other properties have, or their unit sizes, you want to see if you're in line with that. So it's always a good way to also check to see if your pricing is in line with what's happening in the market.
Well, there's a question, Sonya, before you move on.
Sure.
First of all, someone want to know, what is AR?
Okay, yes. So AR is accounts receivable. Okay. So accounts receivable means that these are people that owe money to the property. So these are residents who may not have paid their rent yet. And one of the reports that a property management company can have is an aging report. So it tells you if someone is current. It's usually broken up into 30-day pieces. If it's from 0 to 30 days, if it's 30 to 60 days, 60 to 90 days, 90 days plus, like how long. So first of all, how much do they owe you and how long has it been outstanding? So once you start seeing that, the amounts owed start aging and going older and older, it becomes more challenging to collect those amounts. So it's something that you want to keep an eye on.
And Kenneth asked a question, do you use LASAL as a metric with your property manager?
So what we normally do is we would use you're talking about, I think, like traffic and
yeah. I heard it from like another property manager. They thought that was like the best way, like leads, appointments, showings, applications, uses.
Yes, yeah. To show, you're right, to show like that conversion to the conversion rate. For one of our larger property management companies, they did do that for us. It was very helpful because at that time we were going to do a pretty heavy value add strategy on the deal. However, what ended up, we actually had to pivot and change our strategies, but it was still really important for us to see overall, like how many lease ups were we getting per month, and then also where were they coming from. That was some of the things that we found most interesting. The people who finally ended up leasing, what was the traffic point that was leading them there? And that helped us with making decisions about whether or not we should pay more for advertising, or where we should be doing our advertising.
Thank you. And so if you have any questions, please put the questions in the chat and we'll get them answered as Sonya goes on. Thank you.
Yeah. Lawrence, thanks for that. Just stop me if somebody has a question in case I don't see it. I appreciate that.
Yeah, no problem.
So this is just a little bit of an eye chart, but it's just an Excel of when we look at our budget and we're looking monthly, how are we performing against the budget that we had projected? Where are we from a revenue, the vacancy, that economic occupancy and physical occupancy that I was talking about. So it can be as simple as an Excel spreadsheet for you to track monthly how you're performing against your budget. So this is really just to show it doesn't have to be super fancy. It can be something as simple as an Excel to help you track this so you know how you're trending. So another aspect of asset management that's critical if you have investors or partners is investor relations. So this is when you're providing consistent and periodic updates to your investors just to let them know what's happening on the property. And this is an area of asset management. Again, it really depends if you're syndicating or if you have partners. But if you have somebody else's money in your deal, all of the information that you're gathering throughout your asset management, the weekly meetings, the monthly reviews, it all helps to pull together the story of what is happening on your property that you're going to be able to convey to your investors. So that's why all of that is important. So you're helping your investors understand the performance of the property, the timing of cash flow distributions, managing the annual K1s for their taxes. But a really important thing is also just to help to manage expectations. So setting that up front, whether it's going to be quarterly meetings or whether you're going to have, quarterly or monthly distributions, just so that the investors know that up front. So then it helps your process and your interaction with them. So there are no surprises there. So I wanted to just show you a sample page from a presentation that we gave for one of the properties. I was referring to this a little earlier. And so I was saying that all of the information that you're gathering throughout your management, asset management of the property really helps you put together something like this that you can see what's happening. So, you know, when we purchased this property in 2019, we were at 90% occupancy. And so we knew that there was going to be a dip in occupancy because we were planning on not renewing a lot of the leases, and we were going to be doing some renovations on the property. But one of the things that we realized was that there were more people who were undesirable on the property than we had anticipated, and the eviction process took a bit longer. And so you know, between January and September of 2020, what we found out is that more people had been moving out than moving in. And at first we didn't see that. What we saw was we were leasing up very quickly all of the items, all of the apartments that we renovated, we got them leased up, but we weren't seeing a change in the rent numbers. And as we were started to look at each of the months and the weeks, we were realizing that our occupancy number, physical occupancy, wasn't increasing because a lot of the people were ultimately leaving. And so that was a great realization for us. That it helped us focus on getting units ready faster, because the product that we were putting out was working, making sure that we were understanding when people were leaving. And then towards the end of that quarter, we saw a spike up. We were able to stabilize and spike up. And so at the end of the year, our physical occupancy was about 84%. And then as of 2 months later, or actually a month later in February, we were at 90%. And we were like 97% pre-leased. So that really went to the fact that we needed to understand why we were still in this like lull, and looking at our metrics really helped us identify that, and also it allowed us to communicate that to our investors. So one other thing I want to say about investor relations and social media, that your investors should know everything about your property before your followers. So make sure that that communication about what's happening in your property, anything significant or large, it should be that your investors know it first, and not just the folks that are following you on social media. So this is my last slide here, just a summary. We talked about the strong partnership that's needed for your asset management and property management. If you're syndicating deals, or if you have partners, the fact that that asset management also comprises investor relations. And so that's really critical to make sure that you have as part of your business plan. And that at the end of the day, as the asset manager, the buck kind of stops with you, and no one really cares about your property more than you do as an owner. Or if you manage your own property as well, but you know the decisions that you're making to make sure that your property is operating optimally. So that's my summary of asset management, and just some of the things that we've been focusing on for our last 4 deals and the 5th deal that we have now. Okay, and this is my contact information.
Thank you. I was gonna say, put your contact information in something. Get the contact information, right?
Yes. So you can either contact me through either my website. You can sign up to receive our newsletters. You can email me, and I'm also on LinkedIn and on Instagram as well.
Well, thank you for that great presentation. I like the last slide. The last slide was a good slide. Let investors know, not your followers. Let the investors be first, not your followers. And you see a lot of stuff, you see a lot of things on LinkedIn. And I'm like, I hope the investors know this.
Right.
Thank you for fantastic, opens my eyes up, because you said a lot about asset management versus property management. Asset management, you manage the assets. You also work with the property manager to bring the plan to fruition.
Yes. Yeah. Yeah. And it really is a partnership. I always go into that relationship with the property manager. Is they're my partner, and we're looking to do the same things. We want the best things for this property, and so that's that's the way you have to see that relationship, I think, to get the most out of it. It's really making sure you have the right property manager for the type of property that you have. Okay. Because sometimes smaller properties may be better managed by one property manager versus the other, or depending on the area, the location, or the type of property it is, if it's an older property, newer property, etc.
So anybody have a question? No answer the question, Kenneth?
Yeah, I had a couple other questions, but
Kenneth, come on now. You know how we work it.
First of all, thank you, Sonya. Great presentation and great viewpoint on the asset management side. I was wondering, how do you capture, because one thing I sort of run into on my two smalties is on the turns, not only do you have costs with like the actual like cleaning, maintenance, the actual like invoices, but you also have like downtime for his vacancies, and then it's off-site property management leasing fees. How do you capture all that to make sure you sort of on top of turns, and do you have any tips to proactively manage that? Because that seems to be one of the great, bigger hidden costs, because units vacant, you have to release it, you have to turn it over. So how do you capture those other costs, and then any tips to proactively manage those?
Yeah. So thanks for that. That is something that you do have to have an eye on. What we usually ask is for our property managers to code the invoices related to the turns to the specific unit. So with the software, it's either they have the software. Sometimes if they don't have the software capability to do that, we had a property manager that actually did it in Excel for us, so that we would know how much it would cost for the various turn costs. So literally we had an Excel spreadsheet that listed out like all the different things: sinks, cabinets, toilet, etc. And they put in the information there for us. But sometimes the software, you could actually tag it and flag it, and so then you can run a report that shows you what the total amount of the turn is. And we found this to be really, really revealing, especially in one of our properties where we thought we were doing not the highest level of upgrade. It was sort of like a medium upgrade, but we weren't getting the same level of rent, and it was costing a lot of money. So it made us sort of switch our strategy, and we realized we had to pull back and do an upgrade and a renovation that was more in line with the rent that we were getting. The other thing is that same property, we were going to execute our premium upgrade strategy during COVID, and we realized with our base of population that really was going to be a very challenging strategy to execute, because people weren't, there was so much uncertainty. Spending money to ask people to pay more money didn't seem like the best strategy at that time. So we had to pivot, and having that analysis helped us to do that. In terms of your other question, was just about you know, the property, how long it's taking for an apartment to get back online. We all actually also track that. So we know when there are vacancies, when did that apartment become vacant? And then every week during our meeting, we're asking, where are we with the renovations and how are we doing with getting that resident, or getting a resident in that unit. So that comes out usually in our weekly meetings, because we ask that all the time.
Does that answer your question, Kenneth? Okay.
Yes, thank you very much.
You have any more questions, Kenneth? You said you had a couple. Those a couple?
I tried to wrap them all up in one.
Okay, great. Thank you, Kenneth. Thank you for asking. Anyone else has a question? I have one question, Sonya. How did you get into asset management? What brought you to asset management?
Yeah, well, just being a syndicator, you really have to, in my opinion, you understand all aspects of the deal cycle. So, you know, initially, first you're bringing in the property, then you're, you know, and then you're essentially, once you've reviewed it, you close and you have it now. That's really where you have to spend the majority of the time to make sure that that property performs. Mm-hmm. So, you know, if you have a team where you can have some people focused on, you know, acquisition so they can bring in the deals, but you have to have a focus on making sure that the deals are operating well. So it was sort of like a natural thing, you know, after, especially on my first deal, you know, we weren't looking initially at other deals until we kind of got our deal stabilized. And so we really wanted it to work out well. We spent a lot of time on the asset management. And fortunately, it wasn't a really heavy lift, but we wanted to make sure that you know, we were doing what we could to help make sure that we're hitting our projections. And so for me, it's really, you know, I lean on my accounting and finance background for that part of my role, but it's also really just wanting to make sure that we're doing everything we can to have the property perform the best that it can. And I think that's the drive for me to want to focus on asset management.
Thank you. Can you please stop sharing the screen?
Oh, sure.
Thank you. There you go. Thank you. Before we stop.
Oh, wait, I had a question.
Oh, well, go ahead, Jasmine.
I'm sorry, I put it in the chat, but it was, what was your process to find like a good property manager from a distance?
Property. Okay, so there's a few things. A lot of times I would ask the brokers that we were working with since, you know, they're selling the property, they know other similar properties. They can be a good source of knowing other property managers that you can vet. So I'd do that. If you're in the market or visiting the market, you know, take a look at some of the neighboring properties and just understand who's managing those properties. You know, sometimes just looking around, you can see, wow, this doesn't look well maintained, or this property looks like it's really well maintained. And I kept on calling this. I remember when I was doing this, I kept on calling this one property management company, but they were actually self-managed and they didn't do third-party management. So they were owners and they did their own. But then also having the phone conversations with them as well. So what we would do is really understand from them what type of properties they manage, what size, understanding the software that they use, understanding the resident base that they're used to working with, because sometimes some managers are better with Class A residents and they're not as comfortable with Class C or vice versa. And then once you actually go to visit the market, meeting with them and touring properties with them as well. So you can do a lot over the phone, but it is really good you do meet them in person. When you do, when you're fine, you can look at properties together, so then you can understand each other, what types of things you're both looking for.
Thank you. Thank you. Any more questions?
I have a question.
Yeah,
Good
Lee. Hey, Lee, how
evening.
you-
Thank you for joining. You may know my sister-in-law. She worked at American Express like 25 years. I don't know. Do you know Suzette Kendall Dupree?
Not sure. It's such a big company. I get that question a lot.
Okay. Been there forever. We just had a conversation and Laddie just sent it out. I think he stole my idea in his last newsletter. Who, not how, right? So I haven't been a lead sponsor in the deal, but there's an opportunity cost if I'm doing asset management versus looking for deals and setting up good financing. So the good thing about my experience is that now I've invested in 23 different syndications, and I see the differences of the different operators. But one recent one brought on an asset management team, right? And what they told me is that, yeah, as operators, they were trying to do it themselves, but they just weren't doing a very good job of it. But the asset managers that they did bring on to the deal, right, now is freeing them up, but also that asset manager, as they are looking to acquire new deals, right, are coming in and doing all of that grunt work. So as I look to invest in different areas, would it be better for me to add first an asset manager to my team, or would it be better for me to add a property manager to my team, just based on your experience?
To your team for a specific deal, or you're saying overall? Because you always have to have a property manager.
Yeah.
So,
well, the different areas, like right now we're looking in Southern Virginia and Raleigh-Durham, North Carolina, right? Right. What we have been doing is we have first looked to find a property manager in that area. Right. But that's going to be different based upon the different MSAs where we go into. I'm thinking that it might be a better deal for me to develop a relationship with the asset manager and then put that responsibility on them to work with the different property managers, because in essence, that's going to be their job. So I'm like a little bit torn. Right now, my strategy has been to find property managers so that they can look at our underwriting and confirm that they can put together a budget that meets what we've been forecasting, right? Mm-hmm. But we're not going to be the best at that, right? That's the reason why we have a strong asset manager. And I'm just asking, based on your experience, do you think that it might be good to have that solid asset manager on the team so that they can go in and help you to evaluate the different property managers? Because that's the relationship that's going to be there. I love when I see people, on social media, we just closed. That's the easy part. You got 5 years
exactly
in a business plan and dealing with the market, right? The hard part is day one all the way to disposition. So, that's not the sexy part of the business, but it's the part that adds the true value. So I just wanted to ask, based on your experience, if you were starting all over, what would you do? Would you find that PM first, or would you find a good asset manager first? Well, you're an asset manager, so I guess you have that checked.
So to me, it's absolutely critical to find the property manager, because the property manager is the one that is going to be on the property day to day. I'm not sure if you see in other setups, if the asset manager, it lives in the area, because I like, for me personally, I don't live in the market. So I go and visit the market occasionally, but somebody's got to be there if there's an issue with a toilet, or if there's, something that happens on the property, there's a flood, God forbid, like somebody has to be there. And so you really need a property manager who's going to be able to work to resolve those issues, and then help with the lease up, and also, getting your apartments ready to rent. So your asset manager will be able to then, your asset manager will then can then work with the property manager, but you really need to make sure that you have asset manager property manager first. There have been markets that, now I kind of wish that I hadn't done this, but there were markets that several years ago we did not find a good property manager, and it just from that perspective, it didn't make sense for us to move into those markets, because we knew that we were going to struggle if we didn't have a good property manager.
Got it. No, thank you.
Yeah.
Go ahead, Desmond.
Yes, thank you so much, Sonia. Are there certain things you have property managers that you have to sign off on, or you just allow them to be?
No, so usually in the contract that you have with the property manager, there'll be a threshold that you'll have in there. So if there are expenses over a certain dollar amount, that they need to let you know before they spend it. So just depending on the size of your property, the budget, the types of costs that you're anticipating, you have to come up with an amount that makes sense, because you don't want them slowing down to ask you to, like, if they can do something for like $100 or something. But if there's like a couple $1,000s, again, depending on the size of your property, $2,000, that may be really significant for your property, and you'd want to know.
Thank you.
Yeah.
While we're on that, I got one last question. Right? What is your expectations of turning units? What in your experience, how many units do you work on turning on to the max of the ability to turn on a monthly basis?
Yeah. So, okay. So when we're doing our underwriting, we usually make an assumption about what percentage of the properties we expect to turn every year. Okay. So that's part of your underwriting, and that gets factored into my turn costs. So a lot of times they see for workforce housing, Class C properties, turnover, could be 50%, half of the units. We really try to not have 50% turnover, because that's really expensive for the property. But you want to just keep the best residents. So again, getting some feedback from your property manager about what's typical in the area will help you. But then you can also have your internal targets of, we want that number to be maybe about 40% or even lower. So that's the first thing, setting up what you expect the turn to be. Then in terms of, how much it's going to cost, a lot of that also does depend on how long the resident has been in the unit. So if somebody's been there for a number of years, there's usually more wear and tear. There are some people who have been in the property for years, but they keep it immaculate, and the turn is minimal. We've experienced that. We've seen that happen, and you don't really have much of a turn. So that's a little bit harder to predict, but you come up with an average of what you think, and you're going to have some that are higher or lower, again, depending on your market. You'll need to factor that in.
Thank you very much, Sonia. Thank you for the information. Thank you for sharing your knowledge. And thank you for pointing it out. Right? Took that cup and drank it tonight. Once again, thank you for coming on Financial Independence through Small Multifamily Investing. We meet here every Tuesday at 7:30 p.m. Eastern. Have a good evening.